All right, guys, I think we're going to get started here. So, as always, I'm going to do kind of my main Bitcoin analysis. Start on larger time frames, I'll zoom into some smaller time frames. We'll take a look at the MDX Algo Indicators, see what they're kind of telling us about the trends, see if we notice any interesting signals, because as I've been mentioning in my channel and in these streams, you guys, it just seems like every couple of days we're getting new signals on these indicators pointing towards the upside. And for those of you who are familiar with my channel and kind of following along with these, you'll know I've been quite bullish basically ever since June. And I have a whole bunch of reasons why I think we have bottomed. But if you don't know what I'm talking about, I do have, it's called my Bitcoin cheat sheet video on my YouTube channel. Go check it out. It's somewhere back, I think in June or July, something like that. But yeah, check out that video if you don't, if you're not familiar with my long-term analysis. Because everything just seems to be playing out perfectly, in my opinion, at least so far. I mean, this is my Bitcoin cheat sheet. So this is a weekly logarithmic chart, and I know I've had so many reasons why I thought that we were bottoming out at this level, and it's such an important level because, you guys, I mean, this is a macro market cycle all-time high. Had a little bit of consolidation at this range on the way up. So just to see this level flip from resistance to support on such a massive time frame like this, that just looks absolutely beautiful to me. And I know a lot of people were getting bearish because it wasn't looking like we were getting much of a rally. We're just pulling back. And I know the consensus is that the more we test a support level, the weaker it gets and the more likely we're going to drop. So I get it. It did look shitty when we're trading at this level here. But support always looks like shit. If we look back at these market cycles, I mean, basically pointing out the same thing where we bottomed out here. I mean, we failed our main support here throughout the consolidation of the bear market, as I'm going to call it, I guess. Bear market failed support. We dropped that, and then we just kind of start trading sideways slowly. And then a really interesting chart signal is both going oversold on the RSI on the weekly, but then also breaking out of this downtrend. And that's happening way before the price is actually breaking out to the upside. So it's a very nice early warning sign. And you can see that the previous bear market did this as well. We had our failed bear market support. We ended up dropping, trading support. We got our RSI on the weekly, got oversold, and then broke out of this downtrend line. And that's a very early signal right there, you guys. And it happens right as we're kind of trading sideways, right as the market looks like absolute shit. That's kind of when we get that signal and it starts trading to the upside, catching a lot of people off guard. And in my opinion, that's just kind of what we're seeing here. This whole bear market, we had this, I mean, a fairly well-defined horizontal support box here on the weekly chart. We dropped that, we start trading sideways, we got our weekly RSI oversold, and then we broke that downtrend line. Kind of the same thing, right, as we're trading sideways after that capitulation from our support there. So this market cycle really, in my opinion, doesn't look any different. I see no reason to be super bearish right now, even if we are to carry on this bear market. I know a lot of us have different opinions about that, and that's totally fine because obviously charts change and opinions change, and everyone has different trading styles. But I just think for so many reasons why we're just due for an actual nice pump to the upside, and whether that we end up just getting this kind of support resist flip and dumping and carrying on our bear market. You know what? That's absolutely possible. It's still in the cards. That could happen from a technical perspective. That absolutely could form some strong resistance for us. I've shared my reasons why I don't really think that's going to happen. I think it's going to be very similar to what we had back here. We did struggle at that level in our previous market cycle, but we just kind of traded sideways for about a month right below that resistance rather than getting a harsh rejection. So we're going to have to see what happens if we do get up to this level. And I know I've heard Kieran talk about it. I know I've talked about it in my streams that I think it's a lot more important in the game of trading to be able to react rather than predict. So that's where we have to see how the market actually reacts at this level. If we start just consolidating, tapping away at resistance while we have bullish momentum, yeah, I think it would make a lot of sense that we go up a little higher, maybe get rejected at this structure back here, and then dump back into this box, reclaim it as support, just like we've kind of did in these previous market cycles. But yeah, like I said, if we get a strong rejection from this level, absolutely watch out. We might end up setting those lower lows. There's absolutely reason why we dropped to kind of this structure down here, kind of hitting that 14 to 10K region. And that would make a lot of sense. We'd get our full 85% correction for a bear market. And as you guys probably know, bear markets love correcting about 85%. And so far, we've only dumped about 75% from our all-time high. So that's kind of the only thing still on my radar, as I'm just a little cautious of. But if we got a full 85%, I mean, that's where we're starting to pull back towards that 10K region. So, I mean, I do see the possibility for that scenario, but to me, this bottom just looks very similar to our bottoms back here with the bottom of this bear market and this bear market. So I'm kind of watching for something very similar. And for those of you who are familiar with my analysis, my long-term sight on this, you'll know that although we did drop this blue box here, we regained support at this level, our bear market support that failed here. We did reclaim it here, but you can see we did get these wicks below. We did briefly get back below this box, but that was at the middle of the COVID panic. I mean, every market across the globe was an absolute disaster at this point. That was a black swan event. I think if I even pull up the 200-week moving average, that actually lined up perfectly with the bottom of my box too. And I really think that had it not been for COVID, I don't think we would have lost that support. Much like what we did back here when we reclaimed that support, that's when Bitcoin just kind of went nuts to the upside. I mean, it happened here too. We just got this little fake out panic. But that's really what I'm watching for when I want to declare bull market on. I really do want to see us reclaim this blue box. I mean, I have been vocal about thinking the bottom is in, but I don't necessarily think that we're just going to go absolutely parabolic. I mean, look how long this market cycle back here took to kind of play out. We did absolutely just kind of trade sideways for a while, and we got a couple attempts at pumps and never really broke the resistance. But once we did, that's where the bulls came back into the market. So I absolutely see reason why we just kind of trade sideways longer, maybe running into the Bitcoin halving or something like that. But I really do think this $28,000 to $32,000 level is going to be a very important level for the market. And just if we do end up breaking that level, guys, just a little word of warning before FOMO kicks in. I know I've pointed this out before, but some levels to watch for would be, I like to pull my Fibonacci's. If I'm looking for resistance, rejection points, I like to pull my fibs top to bottom, something like that. And you can see that the 618, which is obviously a very important level on many swings. I mean, the 618 Fibonacci level loves to be retested and respected. And that would line up quite well with this structure back here. And remember, guys, this is a weekly time frame, so that is something to consider strongly. I think that if we do reclaim this box, I see a lot of reasons why we would end up getting up to this level and then getting a rejection right as FOMO's kicking in around 50K. And kind of getting back down and retesting this $32,000 to $28,000 level and reclaiming this box as support, or just kind of retesting it. And from there, I think that's where the bulls are really going to step into the market if that level holds and we go absolutely parabolic. I think the last signal I will be waiting for where I turn extremely moon boyish, and I know I have been possibly way too moon boyish in the past, the last month or so. I mean, so far it is playing out beautifully. It's just a lot of people are impatient, and this is a daily and weekly pattern that I've kind of been watching. So it does take a while for momentum to shift on such a large time frame. But I think when we start getting weekly candle closes above this 618, I think Bitcoin is going to go nuts, and that's where I'm going to put every single penny I can into the market. This is not financial advice. Do your own research, form your own opinions. I have to say it because I don't want you guys to run into trouble. Don't be an idiot. But just kind of looking into previous market cycles, I mean, if you went from this bull market high to this bear market bottom, you can see how strong that level was. That 618, that's absolutely where our first bear market rally got rejected. It got rejected hard. Again, I don't think we would have got blasted through this blue box had it not been for COVID. But I still think it makes a lot of sense that we would have tested into this level before carrying on higher. But look what happens. As soon as we got that weekly candle close above that level, just a straight moonshot. And if we go back even one market cycle further than that, Let's do the same thing. Pull up this fib. I know a lot of you guys, this is probably a bit repetitive, but we have some new faces, so I kind of want to bring this up again because I think it's very important for the macro here. Same thing on this previous market cycle. If we find our bear market bottom here, pulled a Fibonacci top to bottom, that's absolutely where we got rejected again. We got a harsh rejection right at the 618. That doesn't look like much, but what do we got here? That was about a 40% correction, you guys. So it's nothing to laugh at. It doesn't look like much, but that was a strong rejection. And look what happens. As soon as we got those weekly candle body closes above it, we respected it and just straight to the upside again. I bet even on this little consolidation here, I bet we can find something very similar. Let's just pull up a Fibonacci from this wick high to this wick low. So this is just 1 week of price action here. You can see that that's immediately where the price got rejected after we got a bounce. Was the 618. We got a weekly close above that level, straight moonshot. So I really strongly believe that if we get a weekly candle body close kind of above that 49, 50K level on this current market cycle and this current structure, so kind of a close, yeah, just above this level here, that's where I'm going to be insanely bullish, and that's where I'm going to assume that it's parabolic action on from there. Obviously, there's a lot of things that can happen between now and then. The economy's a mess. Yes, there's word of war. We have a whole bunch of things. I'm just not a fundamental guy. I only look at the price action. Eventually, the structure of the price will change if the news does have a heavy impact. But I feel like adding the news, and this is just me personally, I know people who trade just the news and they do fine. You don't have to have the same trading strategies, but I just find that it's just another thing for me to overcomplicate in my analysis, because the more indicators you add, the more things you start looking at, it just really complicates things, and you can be wrong at so many different points at that time. So when I look at fundamentals and I look at the news and I look at Fed meetings and I look at all this stuff, I understand that there's a good chance I don't understand it properly, that there might be some hidden factors that I'm not taking into account, and I don't understand why the market acts the way it does. So I really just try and avoid that, because that's not my specialty. I just like drawing colorful shapes and just mapping out lines and looking at them like that. So all in all, guys, I think this weekly chart looks absolutely beautiful. Again, we had this oversold RSI on the weekly. We got that break, even a retest with this RSI pattern. I mean, it just looks absolutely beautiful. I want to bring up the daily chart here. We broke above this downward sloping trend line all the way from our all-time high. So that alone was fairly nice to see. Even the fact that we started respecting that old resistance as support. Yes, we traded down for another week, but we totally respected that. We never just got this fake out and crashing back down below. But then we ended up getting above this second downward sloping trend line on the daily. And I just think at that point, it looks to me like we're forming some kind of a rounding bottom and just looking for that upward move. Just some kind of a nice relief rally in this bear market, if nothing else. You can see on the Algo 3 here, we have some beautiful calls here, just some bullish divergences here. I will bring up the indicator. And also, if you guys have any questions about the Algo indicators, the oscillators, anything like that, definitely drop the question in the chat for the indicators live chat here. I'll do my best to answer whatever questions you have. But yeah, I like to keep my charts fairly clean. This is getting a little messy for me even. So I don't always have very many signals set on this indicator. Quite often I just have the colors on because I just fucking love the colors. But a couple things I want to mention about the indicator right off the bat. If you're using regular candles, make sure you don't have the Heikin-Ashi calculation box checked. And also, if you right-click on anything, any of the signals there, make sure your visual order is bring to front. I've just heard that some people have had visual issues and stuff like that with some of these indicators. So that just might be an issue. But yeah. Other than that, guys, just bringing up the settings here, and I'm just going to slowly bring some signals into the chart here. Actually, I'm going to ignore the Algo 3 for now, just to point out, I've had this box mapped out on the daily chart here since June, and I had it mapped out since about my birthday, June 22nd, and I was thinking that would be really cool if Bitcoin bottomed for my birthday. And if you look at all these bullish indications we have on so many different indicators, I mean, this RSI down here, beautiful bullish divergence as we trade along sideways along this. And this is where I was talking about, you guys. Yes, typically as you trade and tap away at support, it does usually get weaker. But that's where we look at the indicators. And I mean, this is a massive bullish divergence on a daily time frame. Just as we trade sideways at this level, we just start seeing the relative strength index growing. We just see the strength growing on this trend. The MDX Oscillator 5, you can see ever since we've been trading sideways here, I mean, we just have so many random bullish divergences as we trade sideways at my daily box here. Same on the Oscillator 4 up here. You can see that very recently as we were trading in this chop and people were getting liquidated and wrecked every which direction. If you zoom out and look at the daily here, I mean, we had all kinds of bullish divergences on this Oscillator 4 here. We had a regular, a hidden, right back to a regular divergence there. And now I want to go into the Algo 3. So just another couple of signals here is I know I had the Stoch RSI divergences laid out here. These have been getting very nice reactions quite often, you guys, on a lot of different time frames. I love using these, probably even more than the long and short signals, honestly. But to see that come into play, that was just another bullish divergence coming into the picture here. What else was there? If I bring up the signals, something interesting that we just got with yesterday's daily close, guys, is we got this long signal. And I don't always have these signals on, and you have to be careful. Like, at the end of the day, these are by far my favorite indicators ever since I've been using them the last few months. But you always have to remember they are indicators, and you want to use them as confluence with your own analysis. And this is where I love to see this signal, is we got this daily candle close right above this resistance we were flirting with for the last week or so. We got a daily close above that with a long signal yesterday on that close. That is just looking beautiful, in my opinion. The fact that we even got this wick down to this little box here. You can see it's been an important level for the market here. As soon as we dropped this level, we went for quite a tumble. So yeah, there's just a lot of things shaping up in the charts here that I wanted to bring to your attention. Just, it seems like every couple days between these three indicators, we just see more and more bullish confluence coming into the charts. And this is why I've been so bullish for over a month now, you guys, is I just think as we trade sideways at support, yes, I know it should get weaker, but we see more and more bullish indications coming in these indicators. So it just looks absolutely great to me. If I bring up the Algo 3, here I actually just want to remove some drawings. Bring up the Algo 3, again, this is the weekly time frame. Have this beautiful bullish divergence on the weekly time frame. As well, we see that on the RSI. We went from oversold back into regular territory, curling to the upside with this double bottom right in here. The last time we got this kind of a bullish divergence, I mean, Bitcoin, we didn't even get one last market cycle. The last time we've seen this come into play was when Bitcoin was trading around $200 US. So there is obviously this scenario where, you know, yes, we can get these divergences and keep trading down. But the point is, as soon as the green started showing up, this was showing that the market was starting to get overextended towards the downside. Things were getting oversold. These indicators, or these signals, do not come up often, obviously. So that's something I cannot take lightly, you guys. I'm really looking forward to when we start seeing a weekly long signal. That's going to be great. I just want to, once again, check what I'm all missing here. Oh, the Stoch RSI. I know we got a bullish divergence as well. Same thing, right at this double bottom territory. And I mean, look at the moves that this has been calling previously. I mean, yes, we went slightly higher after this call here, but that did a damn good job of calling the market cycle top. Bitcoin got cut in half with that signal. The next one was bullish. Bitcoin doubled. Even this one right here, yeah, it failed. You can say it failed, whatever, but we still got a 30 or 40% pump to the upside there with a failed reaction there. So the fact that we have all those other bullish indications and really seeing these signals come up on the weekly time frame, I can't ignore that, you guys. I just think this chart looks so bullish to me. Zooming right in here, this is on the hourly chart. Yeah, we got a break above this purple box I have mapped out. Again, this was my daily box that I had, just looking for resistance to kind of flip into support. So it's nice to see on the daily that, or on the hourly rather, we got above it, and then we pulled back and tested kind of the bottom of that box, and then we set a new higher high above this level. So at this point, I would really love to see us hold above this green line down here at about, let's just call it 20.6K. I would really love to see us kind of hold this higher low here. But really, we could drop all the way towards 20K. As long as we stay above this 20K level, I think the market's in an okay place. But right now, as it stands, I'm loving... I would really love if this box right here just flipped right from resistance to support. And although I agree, yes, it kind of looks like, you know what, the market may be overextended. We may need to pull back a little bit. What might be happening here is if the bullish sentiment is really strong, we broke out of a daily pattern, got a beautiful daily close last night. I really wouldn't be too surprised to just see us get a time-based correction instead. So rather than actually getting a price-based correction pulling down, just kind of trading sideways right above our resistance kind of and flipping this into support, I think Bitcoin would be in an absolutely beautiful spot there. Even if we zoom right into the 5-minute, you can see how well this box has been being respected. If we end up closing below this box, yeah, you know, I absolutely see reasons why we could pull back a little bit. I would actually be interested in looking at the Fibonacci's. We're still holding above the 236 here. What I find quite often, you guys, is once we start closing bodies below the 382, that's when we start testing down to lower fibs. Quite often recently, it's been all the way down at the 786, 886 levels, and that would actually be a beautiful spot, in my opinion, very close to the bottom of my daily box here, flipping into support. I think that would be absolutely healthy and great to see. So if the bullish momentum is strong, we might see the 618 or something like that. But quite often in these real strong rallies, when Bitcoin really takes off, it really likes to use the 382 instead and kind of continue on higher from there. But we're gonna have to see if the bulls need a breather. It is the weekend, so it's kind of hard to say what's gonna happen here. There might be a little bit of manipulation or just thin order books, stuff like that. We're going to have to see how it goes. But I just think Bitcoin's in a beautiful position, guys. I don't know. I'm interested to hear your guys' opinions. Does anyone have any questions about the indicators, the preferences in the indicators, what something does in them, anything about my analysis or what you agree, disagree with? Let's hear some of your opinions here. And if nobody has any questions...
Hey man, it's Rashad. Actually, I just joined actually, and I'm not sure what was your prediction. So what was it? What did you expect will happen right now?
I just went over a fair bit of my macro analysis. So this is recorded and I will share it, but yeah, if you want to see the whole thing, you'll have to wait until I post it. But just looking at the short term, I really don't think Bitcoin's in too bad of a position because, as I mentioned on my daily chart here, I do have this purple box outlined kind of where we had resistance here, where we found support back here. As soon as we dropped this level, we really dropped hard. So the fact that we got a daily candle body close yesterday above this wick here, and then we came back down and actually retested that box there and got this daily long signal on the MDX Algo 3 indicator. Things look great to me. The fact that, you know, if we would have got this signal here, but we kind of closed the candle body within this purple box, I would have been a little more hesitant just because then we're getting the long signal as we're trading right into resistance. But I'm loving that we actually closed above this level and got this signal. So I really like that. Obviously, it is a daily chart here. So, I mean, there is a lot of downside room to carry on this higher trajectory. So, I mean, really, we could drop all the way back down towards this 20K level and find support for this little, that kind of looks like a bit of a bull flag here. We could absolutely drop all the way down here and still have an upward trajectory, but I don't know if we're necessarily going to get it. So it is a little risky right now if you're not already in a position. Obviously, using high leverage right now would be very risky just because things are so volatile right now. But as a whole, I think Bitcoin's in a very nice position, to be honest. I took a long at about 20.2. Was that yesterday or the day before, whenever that was? I think the night, actually, it was right after Kieran did his stream the other day. We were kind of talking about being bullish, and I took a bit of a long position after we kind of just got above this was actually just looking for a scalp here. We got the closes above this level here, looked for it to flip to support. We got that, got back above this box, and I felt like I needed to be long because in my previous YouTube video, I had talked about this level as long, even with the bearish Fed news, we stayed above 20K. It just looked very bullish to me, and I wanted to be in a long position. So I think I ended up taking like 3 different long snipes in this trade range right here. I ended up taking a bit of a long. I know I cashed out. I think it was a quarter of it at about, I think I went long at 20.1. Took out a quarter at 20.3 and then got stopped out on the rest. Basically, I had more laddered in orders down towards this level, so I ended up getting in again, and I think it was at about $20,080. Same thing, kind of got back up towards that 20.3, started to struggle, closed a third of it, I believe it was, and then ended up just closing the whole thing as we traded downwards. But when I started to see this respect, just even this very micro analyzing here, guys, but just kind of looking at this resistance flipping into support, I felt like I just had to be in a long again. FOMO hit me hard. I passed out on the couch. I woke up to beautiful gains, and now I'm just in a very comfortable spot. I have taken as much profits as I'm comfortable with, and I still have a part of my position running. So no matter what happens at this point, I made good profits. It's a nice position to be in, just to feel that relaxed. But yeah, I would definitely be interested in adding to my position. If anything catches my eye, I would love to add back into my position a little heavier, because I think this daily chart absolutely has room to go to the upside.
That's absolutely that's perfect, man. Congratulations. So where do you think you would actually be comfortable in going in again or adding to your long? What is a confirmation for you?
So that's where I'm gonna have to wait and see here. Basically, I'm liking right now that we're even holding this yellow box here. If we got, let's say, another touch point, a little bit of a rejection off this, and again, this is a very micro, right? This is only a degenerate 5-minute chart here. But generally speaking, I like to get 3 touch points on a trend line and then a break and retest before re-entering. So if we got 3 touch points on this downward sloping trend line, get above it, retest it, I would be very interested in starting to ladder back into my position. It's easy for me to do that with a level head right now, just because I can bump my stop loss up a lot. So I really don't have much risk doing that. So that's why I'm comfortable doing it. But I will be honest, I am hesitant, because usually when I add to a position, it bites me in the ass. I go into a nice winning trade. I think I'm the smartest man alive. So I end up FOMOing in, thinking I'm looking at the charts perfectly. I double down on my position, and then I have to raise my stop loss up too much, and then I end up just pissing away some profits, basically. So I'm hesitant to do that right now. I might wait until we get an actual good pullback. You guys who have been following along in the chat probably know that I just freaking love my 786 and 886 Fibonacci's. So where I would definitely be interested in adding is if we did end up taking a bit of a price-based correction, and then let's say get some sort of a double bottom with some bullish signals, bullish divergences on the oscillator 5. That's something that I really like to see. One of my favorite, actually probably my favorite indicator lately has been the Oscillator 5, more so than the Algo 3 even. Just because I've always been a fan of the RSI. I don't just look at it as overbought or oversold. I look for divergences in it. But the Oscillator 5 just reminds me of a beefed up version of the RSI, just with a couple extra tips in there. So I would really like to see us get some sort of consolidation, double bottom, triple bottom, bullish divergences showing up around the 786 or 886. That would give me a lot of confidence to add to my position. Right now, we're going to have to see what happens with this red line, because I'm not so sure that we're actually going to drop back into this purple box. I am feeling a little FOMO-y right now, and that's kind of telling me that maybe I shouldn't add to my position, because again, like I said, I feel like the smartest man alive. I had a good trade, and now I want to add. But I think getting greedy might bite me in the ass right now, so I think I'd like to see a decent price-based correction before I'd actually add.
Please do. How are you? So what would be the bear case in your analysis?
Bearish case? My bearish case, let's just see here. Bearish case, I would say getting back to the 4 hour. Even the 1 hour, I would start to really second guess myself if we start closing back down below 20K. If we start closing back down below 20K, then I think it makes a lot of sense that we'd test down quite a bit lower. And I'm just going to kind of look for some Fibonacci's right now just to ballpark it. This seems a little unrealistic right now just because, you know, how bullish I'm feeling right now. But again, the market doesn't give a shit about my emotions or what I feel about the market. But if we're just going for Fibonacci's from, basically this whole swing here, I wouldn't be so surprised to see that 786, 886 come back into play, and that would actually line up with retesting this daily box again. We start respecting or testing that box again, I'm really gonna have to start second guessing myself, because I think at that point we might see the indicators start to drop their bullish divergences. And in that case, I think that would mean that we're starting to see, as we tap away at support, we're actually starting to lose strength. But as it stands right now, I think as long as we hold above that 20K level, I mean, we just kind of keep setting higher highs at this point now. On a smaller time frame, I'd still really like to see us eclipse this resistance back here. But just to see that we've got some closes above this level. Yeah, we pulled back into that level, but then just respected that 20K and then got our close above here again. So yeah, in my opinion, things look good. Even if we end up dumping a little bit, I wouldn't be too surprised to see even some kind of an upward sloping channel like that if we zoom into the 4 hour. Starting to get a little messy here.
How you doing, trader? StuTube.
Yo.
How you doing, man? You good?
Good. How you doing?
I was going to mention one thing as well. You know, SPX opening on Monday. I think it's going to be really important for the markets. I think the correlation between Bitcoin and traditional is so acute right now. It's so similar.
Yeah.
You know, maybe talk about SPX as well, because you know, if we do get, I think Bitcoin does really rely on that as well. So have a little talk about that. That'd be great.
Yeah, absolutely. I can hop over to that. Before I do that, I want to talk about the DXY just because I already have it loaded up on the shitcoin chart here. This is a very important level. I know a lot of people were thinking the DXY was just parabolic. It can't be stopped. But this is a very large upward sloping channel here, and I think it makes a lot of sense that we would start to get rejected here. I know I've talked about this in previous streams and just my own videos and stuff like that, as well, looking at the Fibonacci's that we're starting to test here. You guys, this Fibonacci on the DXY has been pulled from over 20 years ago. There is a ton of data in this chart right here. And since I love the respect that these fibs have been getting in the charts, I think this absolutely makes a lot of sense that the DXY could take a little bit of a tumble here. Even this upward sloping channel here is over 10 years of data. So I know that, like Max just said, I mean, the Bitcoin and the SPX are very well correlated. just like the DXY and Bitcoin are very inverse correlated. So I start to see the DXY trading into resistance, starting to show a little bit of weakness. And you guys, this is the monthly chart. This is absolutely huge. So yes, it'll take a while to play out, but I just really think this is a perfect level for the DXY to get shut down. And getting that while Bitcoin is kind of trading at support with bullish divergences, the DXY is trading at resistance with bearish divergences. Yeah, I don't know. I think Bitcoin looks great in that regards. Let's bring up the S&P 500 here. I don't look at this chart all too much, but I obviously had a few things on my mind last time we looked at this. We have this bit of a broadening wedge here. Just looking at a full swing here, and again, this is a ton of data. We're going back years here. But interesting, if we were going to drop down to some further fibs, obviously that could be quite bad for Bitcoin. But I think it would also make sense, although we don't respect the 0.5 quite as much in crypto. I think this is an important level for the SPX, just because you can see that we had resistance here, and as soon as we got above that, we kind of respected it as support. So I think this is a very important box of support for the S&P 500 here, the SPX. And yeah, like I've had this mapped out for quite a while. I haven't looked at this chart for weeks. So to see it being respected so well like that, as well as we entered this support box here, you can see that the Algo 5 actually got a couple different bullish divergences. That little line there is one. We got one here. The RSI got a bit of a bullish divergence while it had this little double bottom here. We do have these potential pivot points. Just a little warning there that, you know what, we might be looking a little weak, maybe about to roll over bearish. But yeah, just once again, we're starting to see a lot of bullish divergences, stuff like that. So I think the SPX is actually in a very good position as well. I would really like to see, now that we've tested this resistance line a few times, I would like to see us kind of test it once more maybe, and then get back above this yellow box and kind of flip that into support and carry on from there. So we're going to have to keep our eye on that as well. Do you have anything to add to that, Max? Have you been eyeing up? I know on Twitter I've seen you've been eyeing up this chart quite a bit. Or any?
Yeah, man. No, I'm here. I'm just running between the kitchen to get my glass of organic red wine and then back to the charts, legend.
Ooh, fancy.
There we go.
Organic,
fancy, man.
red wine.
Got to hit the organics, man. You know, you can drink a bottle of red wine if it's organic and there's no hangover. You just feel great.
That sounds way better.
But no, SPX is like, look, when the market's super greedy or super fearful, we know like everything huddles together. So like everyone kind of just plays on those emotions. But it's probably the highest correlation I've ever seen. You know, Bitcoin's traditional at the minute. I've been going through TradingView and like putting even the like shitcoin charts correlates to SPX, then SPX correlates to Bitcoin. You're just like shit. Like even the Fed meeting it's so similar.
Oh yeah.
And we know that Bitcoin can usually get like on the weekend a little bit irrational. You know, it can either get a little bit too exacerbated to the upside or downside, depending. And I think what we have now on Bitcoin is good. It's a really good look. But if we do see a big bad close, you know, really shit open on SPX on Monday, I think Bitcoin will just have an even sharper crash down, probably to 20K.
Yeah.
So 20K is really important, like you said. You know, 20K is the inflection point. Everyone's trying to overcomplicate it with different levels. It's 20,000. It's the prior macro long-term bull market high. So it's really, really important.
Yeah.
And you know, it's a trader's paradise right now because I'm long from 19.4, but I know that if I get stopped out on my trade long, it's probably going to be a really juicy short trade as well. Because as soon as you lose 20, it's a short, and then bang, we're going to 18 probably, or 18.9 first, and then it will probably be a leg down. I can't really see it holding up again and again, because we know that there's only a certain amount of buyers. You know, the order book will just get rinsed. And if SPX wants to go lower and maybe even do something crazy, like another leg on the SPX down, it's going to be bad for Bitcoin. But we have to remember that Bitcoin's already gone down 70%. So
yes,
you know, we've got this good dynamic there. But if SPX opens and it's great, we gap up, we break the prior micro high. You know, I see Bitcoin having a really nice bear market rally. You know, I think if SPX has a bear market rally, a significant one, it goes to trend, like you showed on your chart. But I think Bitcoin can really get hot and go to 28. I think 28 is the top side. Obviously, we've got to go 22.7 and then 25. Those are the logical levels. Because it looks good right now, but it's not, technically speaking, really good because we haven't even broken the micro high. Okay, we could say the very, very last one we had, that little one.
Yeah.
You look at that's good, but we want to see that next one. Because if you look at a few altcoin charts, like look at Solana or look at, let me on the top of my head. So there's a few different altcoin charts. But Sandbox is a good example, okay? It's hit the lows, it's hit the bottom, and it's broken all of its macro trend, but it's just flatlined. It's just still going flat for like you see that chart there. It's just like,
oh, that looks beautiful.
It looks really nice. Yeah, these are the kind of charts where you're like, where's the risk here? It's an asymmetric trade. Dogecoin was the same, but Dogecoin had that micro pump. I think Dogecoin's going to go a lot higher. But you can see here that, it's just flatlining at the bottom, basically. And yes, it might have a few ticks down, but if you're clever with your stops and you're clever with your risk, it's a very good time to accumulate spot and if not get some low leverage trades in, because it's very unlikely it's going to be any lower than this a year from now if you're going to play a medium term play or a long term. But a lot of these altcoins kind of they kind of led the market. What we're seeing Bitcoin doing now is what these altcoins did months. They've been doing it for a lot longer.
Yes.
But we'll see what happens to the SPX. It's going to be an interesting day. The Fed meeting, and we know that the Fed is going to keep hiking. But I don't, like I said, like you made a great point at the start. It's like, look at the charts first. Who cares about the news? Who cares about all this stuff? Because as soon as you hear news, it's too late anyway, and it's not quantifiable because you don't know whether people are going to take it positively or negatively. So it's better just to play your risk management on the basis of price charts than, there's going to be a meeting tomorrow, up or down. It's just basically gambling. So
but exactly.
If SPX is positive, I think Bitcoin has a really good go, and we get above 22,700. And like in a decade, like we're analyzing it, but the trade is this: you're long if you're over 20. I'm long from 19.4. If you're over 20, I'm buying, and if we break 20 and we find it as resistance, I'm selling. So that's kind of the inflection point.
Absolutely. And something that you said just kind of clicked with me too is that how some of these altcoins are just flatlined. They're just trading sideways. So many times across social media, on Twitter and stuff like that, I'm sure is that people always say, a bear market has to end with a whole bunch of sideways trading. And now that we're trading sideways, people are flipping super bearish because we're not getting a strong reaction rally. And it's like, because I'm seeing it on Twitter that bearish posts are still getting a lot more engagement than bullish posts. And I think a lot of people are desperate to get Bitcoin cheaper and to play a short because they feel like they missed the long. I think a lot of people are very bearish right now when maybe they shouldn't be, because they're the same people saying, we have to trade sideways a bunch, and now, we're trading sideways, so it's bearish.
Honestly, sideways is more painful than down or up, because sideways is the worst. Like, think about crypto. It's predominantly traders in this market. Like, there are hodlers, obviously. It's hodlers or traders, okay? But most people are just on leverage, just battering the buy or sell button. So sideways is much more infuriating for traders because there's no opportunity there. And also you get cut up and you're trying to force a swing onto a range, and it's the most frustrating place to be for most traders is flat. And flat for long enough is, in essence, either support or resistance, because if you go flat for long enough, you're just going to end up finding a support on that. That is actually a good identification of support, where you're just going flat on top of it.
Yeah, especially when you start seeing the bullish divergences and stuff, right? I mean...
Yeah, exactly. Well, the indicators are beautiful. Like I speak about this a lot, but we've got this cake. The biggest update ever to the indicators are coming next week. We have like literally got jam-packed shit coming.
Nice.
But what I'm looking at more and more on the indicators, over the last several months, is the bullish divergence calls on the MDX5 and then the MDX3. They're on both. It's on any time frame, there isn't many instances where you at least don't get a candle in the other direction. So if you're looking for a reversal play trading strategy, or you're trying to do some sort of like pivot point or reversal trading, I think it's really powerful, because there isn't many instances, even on the chart you're looking at now. Those two big green dots where you've got multiple counts of bullish divergence.
Yeah.
Even those two, the next candle was up on both occasions. So in terms of a risk management standpoint, it's pretty nice, because it means that if you do get into a position on a reversal trade, which is risky, reversal's hard. But you can just move your stopper to break even because it's very, very likely if you back test it that you're going to get at least one candle in the right direction, so then you're not underwater straight away, and then you can actually just put your stop up. But
Absolutely.
Max, is there any way of getting the blue dots on other altcoins?
yeah, so that's literally something we're going to have implemented. Okay, the reason, okay, I forgot the reason when I spoke to my dev. The reason we don't have stochastic RSI blue dots built into altcoins is because there's just so many of them. Like, it's almost not even that good because it's just like the frequency of the calls on stochastic RSI and altcoins. Because you got to remember, some of these altcoins are trading fucking $50 million a day, and it's so volatile that you're just gonna get blue dots. I remember what we did is, I'll just tell you how we made it. Okay, so. We don't actually show stochastic RSI divergences on anything low. So the 4 hour is the last time frame we do, even on Bitcoin. Because if you go too low, it just if you look at the stochastic RSI on the 1 minute, it's like just up and down, up and down, up and down. So you just get too many signals, and it's not really that valuable. Maybe we could create an iteration where you could do it if you want, but we found that the 4 hour is anything below the 4 hour is only showing the 4 hour stochastic divergences. Okay, that's it. So if you're on the 1 minute, you're only going to see the divergences on the stochastic RSI from the 4 hour. But on altcoins, we found that it's even more crazy. But I did speak to the guys, and they said that we're going to put it in there, but just have an on and off switch, because stochastic RSI in its name is a more exponential version of the RSI. So if you're on lower time frames on very volatile assets with not much volume, it's just going to be fucking mental, and it's not really that, there's not really a strategy out of that. You could probably pull something on like some sort of automated system, but we'll let you have it, but you make of what you want,
Yeah.
Yeah, no,
Guys, just a quick question. Are we able to, if it's possible, can we just look at Polygon for a bit? Because yesterday it had a kind of like a massive run, let's say. And I'm just wondering, what's your opinion on this one, Matic?
Matic, right.
Just to say one thing about
I haven't looked at this in quite a while, actually. I think since old Pete No Stop had me look at it one day. I think it was back here, actually, and I said it looked great.
Mate, one thing about Matic, and it's my biggest win ever in crypto is Matic. Like, it literally is. I got in at 4 cents, and it fucking went to like the moon in the bull market. Like, Matic is the reason I got into Matic when it was super, super cheap wasn't really on the premise of technicals. There's two different ways of looking at markets. Like, technicals are where you get your entry, and technicals are the win, they're the king. But like, Matic has that story about it, which is about, trying to scale Ethereum. So I think that story is really powerful in just the whole macro kind of like, what is this thing? And then in terms of technicals, it's looking pretty good at the moment as well. It's just broken out. You can see there on Stutu's charts. But I'll let you run down some TA, brother.
Yeah, well, like you said, it just kind of looks like it broke out here. What I don't like is that it never got a third touch point before pulling back and getting a nice breakout there. But this is the daily chart, so I mean, it does carry a little more weight. We did eclipse some of these highs back here. If I was to start looking for kind of rejection points, I would actually like to pull a Fibonacci here. When I'm looking for rejections, I really like the Fibonacci's. That has also become one of my favorite indicators. And this is one of those things, once again, where I think if we do get a very nice rally out of the market, I think that's where we start targeting some of these higher levels here. But obviously, again, this is the daily chart. There's a lot of things that could happen between now and then. Even if you wanted to play it a little safer, let's say we're looking for a much smaller swing. Let's say even right here, just going from this range here, because we did sweep these lows here, set a new lower high, broke down there. We actually got back above that, but we are starting to struggle at that level. So I'm not going to really I mean, it does look like it's trying to take a turn to the upside here, and I'm sure it will depend on the rest of the market, like Max said. I mean, see how the SPX looks on Monday, see how Bitcoin looks on Monday. But as it stands right now, I like this. I mean, rising wedges are typically more of a bearish pattern. I mean, depending how you draw this, though, right? I mean, you really could probably make it more of an ascending triangle. More something like this. And if we're looking for a target on a move like that, I mean, let's just take the full measured move of this where we broke out from. Let's say even where we kind of like found support before we broke out, we would be looking for quite a nice move from here. I mean, that would be another 30% to the upside. If we got the full measured move of that triangle, we'd be, well, from where we are right now, you'd be looking at more closer to a 50% pump from here still. And look how well that actually lines up with this resistance back here. I think it makes a lot of sense. That's where Matic could be heading to. This is obviously a very important level for the market. I mean, we were getting rejected back here. We're finding support here, rejected here, rejected here.
Have a look at the weekly as well, just to chime in. Because you got that nice little ascending triangle, or that like ascending formation in terms of that trend line. So that's the level.
Oh,
if
yeah.
you lose that, and it's likely going to go lower. So there's a nice little, there's a good like, trigger point or inflection point there where, if it breaks the uptrend on the lower time frame, then it's quite logical that you get out. So you're long until proven otherwise, really, on this.
Absolutely. Yeah, I mean, we might see a retest of this triangle or something like that, but I really think it would make a lot of sense that we do retest this level.
If you're not in Matic yet, you don't buy the breakout. Just wait. Okay, you might miss the move, but that's fine. There's a million other tickets you can trade.
Yeah.
But if it retests the top side, that prior micro high, so the one before, the previous one on the weekly, if it retests that, you buy it. You don't know if it's going to hold or not, but you just buy it, okay? Because it's a prior support, okay? So it's an SR. You buy it, you might get stopped out, okay, whatever, lose 1%. And then when it comes down to the trend line, buy it again. And then if it loses that, then flip. And then flip down to the next trade, because then you know it's probably going to go to the macro lows. And then you just do the whole thing again, cycle out again.
Absolutely.
But again, like I said, we have to be with the SPX. My theory on SPX is this: like, I do think it's going to make a higher low. I do think the SPX can have some upside. I think it should retest trend. But like, the thing is with it, the thing about SPX is basically banks run the fucking stock market and exchanges run crypto. So we just need to make sure that there isn't some sort of fate, like there isn't some sort of move here which breaks the lows. Okay, if it breaks the lows and they push it down to break the low, it could get really, really like bloody for crypto.
Yeah,
but I would say, that's the next level down. Like I would say this, like if my hunch is that it's going to make a higher low, I do think it can make a higher low, and I do think it should retest that top side trend line. I think that's my hunch there. So if my hunch is that on SPX, and I'd say my hunch is probably Bitcoin goes a bit higher. But the invalidation point on both charts is obviously the lows, which is it's slightly higher than lows on my charts. There's another support, and then 20k on Bitcoin. If we lose 20k again, we just go to 18.9, and then there's a nice trade there. I really do like the setup here. This is a really good time to be looking at the market because it's slow enough for you to think a lot. A lot of the time in trading, it all happens so fucking quickly.
Especially in crypto, right?
Oh yeah, of course. Crypto's nuts. Yeah. But right now, it's there's a lot of time to analyze it, and I think that 20k is the most significant level for Bitcoin probably ever. Yeah. Considering it was the high of the previous bull market, and now it's beautiful in the long term that this is even happening. Like this macro image you're looking at is in essence the ultimate bull like scenario. It's like the market goes up, it comes back and retests its previous resistance, and this is like the beautiful way to evidence that TA is very, very interesting to use because it kind of like validates the whole fucking thing. It's like, look, on a macro scale, it's slow, so you can see very, very nicely that we're finding support in the prior the macro. But that happens on every fucking time frame.
Yes.
So it's pretty beautiful, really.
I
just,
know
we're little chart whores out here. We're all like nerding over our charts, but it's great.
Like I know a lot of analysts, I think yourself included, use your Fibonacci from our COVID low there. And this is all personal preference. I take mine from the bear market bottom to the bull market high. But just another thing is look how perfect that 786 has been respected with the bottom of my green box there. I
actually do 3. I'll do COVID lows. I'll do 10k. Because actually, if you really think about it, the beginning of the swing from when we started the expansion of the prior bull market was when Bitcoin went to 12,000 and then dumped to 10. That was actually the beginning because that was where we found support. That was the first support before the actual initial move. So you could draw a fib from that as well. But draw a fib from there, draw a fib from COVID, and draw a fib from the macro low, and then it's even better because then you're getting like 3 or 4 different lines on the chart, and they all have their own little, kind of their strength, or you could say their importance
Oh, exactly.
But
And that's one of those moments where I think it's more important to be able to react rather than predict, right? Because, I mean, you want to see which lines you're watching that are actually being respected well before you're entering positions and that kind of thing. I just like the way this lines up here, but really they don't change very much if I pull up to our COVID lows there. The 786 is still very close to the bottom of my box there.
exactly, it's all in the same range, and it's Fibonacci retracements are much more powerful than Fibonacci extensions, for sure, in my experience.
I think
Because
so too,
Fibonacci
yeah.
retracements give you confluence with other things, like other price action, other levels, you know. So and obviously order books because it's prior trading history. So a lot of people like use the rule of 7 for Fibonacci extensions, or they look at like, you know, all these crazy fucking like calculations of, oh, if we did this amount of gain here, then we're going to do this in the future. But it's much more difficult to predict the velocity of the upside than it is to the downside in terms of a new. And if you're trying to predict how far something's going to go into the future with no resistance above it, a blue sky breakout, you know, have fun with that.
Yeah.
It's just more difficult timing tops and bottoms in general in trading. Like most people don't talk about this, but it's just much more difficult. It's much easier to time bottoms than tops. And that's because of fear and greed. You know, they're two different emotions. But I've spoken about that quite a lot.
Yeah.
But that's why I love Fibonacci retracements.
Yes, me too, because
They
there's
line up-
actually
yeah.
history there. Yeah.
Exactly. And everyone, you know, it's so much like everyone's a long guy. Like to make loads of money in, you know, it's not Warren Buffett isn't fucking where he is because he was trying to short shit and sell stuff and like, you know, longing is the real way to do it. Because shorting is basically more difficult because you have to catch a knife, you know, a lot of the time because things just in one go, but they take, you know, the SPX takes 15 years to go up and then it will lose everything in 6 months. So
Yeah, absolutely. It well, as they always say, right? Staircase up, elevator down, or jump. Bulls take the stairs, bears jump out the window.
yeah, I
However
like
you want
the
to look
bulls
at
take
it.
the stairs. Bulls take the stairs, bears jump out the window. I think that hits home a little bit more. It's like swearing as an adjective. It just hits home a little bit harder. They jump out the fucking window, legends.
Yeah, there's something a little more
You're the-
real to it.
They take the elevator. Well, the elevator doesn't feel that crazy, you know. And then, oh, we'll take the stairs down. No. You're jumping out a fucking window. It's,
Yeah.
it's straight out the game.
Yeah, so we're gonna have to see what happens here. Actually, something I wanted to do. I wanted to bring up Palm's chart here, since I know some of
Let's
us
do it,
in this
baby.
group are into Palm. Yeah, I have.
I
Here
love the way you're doing TA on Palm. Like Palm for me is just something I look at where it's like $5 million market cap. I'm like, you know what? I'll just, you know, give the TA a rest and just, you know, play the investment
think
card.
enough
I love the way you're
Palm.
doing TA on it. It's doing
Oh
some
yeah,
good stuff.
and make no mistake, I am like I guess I started adding to my stake again as we started trading at this level, just because once again I'm just looking for a resist support flip. I'm not interested in trading this. I'm just kind of looking for pullbacks where I'm gonna be interested.
But mate,
to
look
add
at the
into my
chart
stake.
though. It's so organic. It's beautiful.
Yeah, like even if we end up dropping a little further into my green box, I mean, it lines up with this upward sloping support line. I think Palm looks good. I don't know. I'm excited about my stake there. It's fun to watch your coins climbing. I haven't been much of a staker in the past, but figured may as well roll the dice on this one. So far, so good.
Where can you trade
Game,
this
man, with
actually,
that.
the pump?
Sorry, what's that?
What's that?
Where can you trade? Where can you trade this palm? It's not on the Bybit actually, no.
No, I think
No,
you have to actually
like a
go to
super
their
micro cap.
website.
Well, you can get it on
yeah,
Uniswap,
Pancake
Uniswap,
Swap,
Uniswap.
right?
Yeah. So
Pancake
like
Swap,
Pancake
yeah.
Swap, yeah. But this is not
Okay.
this won't trade on major exchanges just yet. It's going to go onto some big centralized exchanges when the on-chain is built. I know the team like vaguely, but they said that it's probably going to be within a couple of months that they're going to be on bigger exchanges. But the thing is about like I used to have this joke back in 2017, and that the first really big altcoin season, and it was like the shitter the exchange it's on, the more money you're going to make. Because it means that the less people have access to buy it. You know, if it's really difficult to buy something, which is good, what you're doing is you're just limiting the liquidity. So people who want to buy it, they literally can't. So it's if we're talking about Palm Swap now, and there's no guarantee that Palm Swap is going to be the DEX of the future. The idea of DEXs right now is that DEXs will be the future, and you've got to just try and spread into some stuff which you think is good. But we know that, you know, at the end of the day, with this whole new decentralized exchange industry, The one which will win probably won't have the best tech, but the one which will win will gain users, and then they'll gain human capital because people will move to that project because they get a lot of users, and then they'll get the money, and then they'll have the best tech. So PalmSwap might not be it, but I just have a good feeling about them from what they've built, because it is the first on-chain DEX. Even if the front end goes down, you don't lose anything. There's literally nothing like that on the market right now. Even if you have DYDX, if you put money, you have to like deposit it into DYDX from your MetaMask, you'll lose your money. So it's like full-blown 100%. You have custody of your own money, and there's no other person. That's really nice for me in terms of a hedging strategy, because it's like, now I don't have to have any exposure to anybody else, and I can short the downside of so I could short the other side of my spot positions without even having it on an exchange. So it's like I'm shorting my own spot with spot. Fucking amazing.
Yeah, that's a beautiful,
really nice.
Beautiful thing that they're bringing up, in my opinion. I don't know. I see actually one of the, big green lights for me was just the other day, and some people might think this is bearish, whatever, but I tried to add to my stake. The coins disappeared, and like it said, what was it? Even my total earned palm from my stake, like it dropped whatever amount I tried to move over and compound. I brought it up on the Telegram thing. That team had it sussed out so fast. Like I kind of just sent a message on there before I went to bed. In the morning, I saw a couple other people were like, yeah, I'm having this too. The devs just answered right away. They're like, yeah, okay, we're on it. And by the time I woke up, I had more coins in my stake and everything was dandy. And I was just really impressed with how fast they acted with that.
Yeah, I wasn't, to be honest, I wasn't too impressed with the launch. I was kind of pissed off, to be honest, because like it wasn't that good. And like I understand that launching anything is difficult, and these unforeseen things happen. But it's good to see that it didn't really affect the root of what the token did anyway. At the very beginning stages, it could have been better, but people make mistakes, and all I can, that's all we can say. But at the end of the day, like it's a fucking new thing. And they do have a really good team. So I do know, I met them in Dubai actually. So they are pretty cool. And like if they can just keep all they need to do really, I tell them this every day. They just need to get traders who will use the platform, and then they basically refer their friends to it. That's what we need. Like BitMEX got big because of that. Bybit got big because of that. Obviously Binance is massive, but like you just need to have a lot of traders at the start to like get that good base of volume. So then they actually have some sort of revenue, and then they can build on all the small things, like making the matching engine faster, like making sure there's not cutouts, making sure the MetaMask fees are low, whatever it is, all these things need to be like thought about. But let's see what happens. I think fucking even all this crap we're talking about, it's $5 million market cap.
Oh, exactly. Right.
No one like me is going to be lower than that.
Traded in the last 24 hours was $150,000.
Yeah, 50k moons this thing. Like if.
Yeah.
I think just even my influence in speaking about it, on my YouTube channel into another bull market will probably be enough to make it go to 100 mil. Like that's one person, and like it's kind of all you really need is traders, and then because of their token metric system, token economic system, it's very similar to BNB.
Yeah,
that's another thing.
They have some referral fees and some crazy referral. Benefits.
Yeah, it's
right?
so important. It's so important. Everything's a ref link. The reason Crypto.com is so big is because they had an incredible referral program at the beginning. So anyone you referred, you got $50 and they got $50. The ingenious part of it was that actually they just minted more tokens and they didn't actually give you anything. But those tokens, the market price of those tokens was high, so it kind of gave the illusion that people were getting $50. So that was ingenious from Crypto.com. They are literally the biggest standalone app right now with users. Bybit beat BitMEX. Guess what? Because of their really, really lucrative referral program. So like because the internet's made it so everyone can connect so quickly and everything's a link and it can be tracked. It's just like you need to have a good referral system, because then you refer your friends, you get rewarded for that, and then they get rewarded for whatever they do, and it kind of builds that.
Yeah. Oh, absolutely.
They're trying to go for there as well, which is good.
Another thing, Max. The only thing their name is pretty shit. I think
the name's whack, man. I hate the name. I actually spoke to them seriously. I was like, you need to change the name, and they said, okay, yeah, you will change the name.
They do.
I think they are planning to change the name. I want them to call it like PalmX or like, just call it Palm.
Palm.
Just call it
Palm
Palm.
Exchange.
Like, Or Palm Exchange. Palm Swap just makes it so Uniswap, Burger Swap,
Yeah.
Sushi Swap, fuck you swap. It's just, I hate all that crap.
Yeah.
Just another run of the mill, freaking random coin showing up is what it sounds like, right?
But I do have there's two ways of looking at it. It's like, I know it sounds shit, Palm Swap, right? And I don't want it to be called Palm Swap. That's because we're more like, we trade a lot, but then you have the kind of thing where it's like, well, maybe then they'll gain a lot of like retail normie kind of customers. But I don't know. I think they should change it to a better name. But we'll see. We'll see what happens.
Yeah, that's all we can do. Like you said, it's a $5 million market cap. It's a lottery ticket as far as I'm concerned. And let's let Jesus take the wheel here.
Well, it's already 10x. Like I think we all got at about 1 or 2 cents from the fair launch. So
yeah, it was 1.8 cents. So
1.8 cents.
Yeah,
It went to 14, and it's a bear market. So, this is the kind of stuff. The actual team was going to not launch in the bear market, and I was like, guys, like, just think about it. Like, launching in the bear market is better because you're not going to get all this crazy hype. You're not going to get all these crazy charts which look like hockey sticks and fuck it up for 6 months because everyone's in and then everyone's out, and then it harms the project like more. Sometimes when a project really pumps, I got into something called swarm markets. That was a really big win for me, and that was it's basically a semi-hybrid decentralized exchange for equities and like traditional indices. And it's a really cool project, and it fucking mooned off the bat. It did like 100x, but then it had this insane hockey stick down, and that actual crash was what stopped it from really growing for ages because no one would touch it. They're like, fuck that, I'm not going to go into it. Yeah. And it hurt the platform. So if you build in the bear market and you have a decent start without any crazy volatility, I think it's generally quite good because it means it will just.
As you touch on that, something that comes to mind would be look what happened with Casta and VPAD, for example. They just went to the frickin' moon right off the bat, and ever since they just are having a hell of a time recovering.
Yeah,
they pumped, and then they just took too much damage there, and it's really having a hard time. They're going to have to prove themselves to get kind of back up to those all-time highs, right?
Yeah, it's not really like the token affects the company. It's more the token affects the brand. That's the problem because it's like you get associated with something which is a shitcoin, which then just damages the brand. The company doesn't really care because they obviously have whatever they have in terms of their investment outside of it. But yeah, I think
they get safer money. They get safer money.
What's that?
They get safer money. So people are in it for the long run rather than just that pump.
Yeah, for sure. If you're buying something like Palm now, like who's buying it? It's guys who are into crypto seriously. If you're literally on this live chat right now, like in this Discord server, like you're into crypto. Like you're probably in the 0.01% of the world right now, like really into crypto. Like most people are just giving it. They think it's a scam. Again, it's not as bad as the last bear market. It's not as bad as the previous one before that. Like imagine the last bear market lows. Like everyone really thought it was a scam.
Oh, exactly.
And then the one before that, it was like wasn't even existent. So it's
Sorry.
I'm sorry. Sorry, go on. Did I interrupt someone?
No.
Yeah, actually, no. I was gonna say, where do you see how high do you think Palm could get to? I mean, you said it's a $5 million market cap, so
Okay, so just do this. I don't know the exact numbers, but what is DYDX right now? I think it's last time I looked was like over 100 million. Okay, so bring up coin market cap.
Oh, coin market cap.
Yeah, coin market cap, and then look at the market cap of DYDX, and look at the market cap of something like there was another called Polydex, and then there's another one called
120 mil.
Yeah, 120 exactly. DYDX. So that's a competitor, very similar but not as good because they're a hybrid exchange. PalmSwap's 5. And it's doing it fundamentally is a better thing. So, that's from there on, that's another 10, 20x because 10x from now is 50 mil and then 20x is 100. So it could do 20 more, but it's already done 10. So from 1 cent is 100x.
Yeah.
But anything you're buying at a fair launch or a pre-sale or a pre-launch or a fucking IDO or whatever it is you're calling it, like if you're buying it at the very beginning, I remember I bought EOS at I bought EOS at 40 cents. This was years and years ago. That went to $22. Like, are you fucking it's just mad. Like, if we're getting in at 1-2 cents, It's very unlikely. I just, even just no fundamentals at all, just technically speaking, it's a good chart to be in at this stage. It's unlikely you're going to sell at a loss in the future.
Yeah, the only reason I got in it was because it was the fair launch, because I've tried to do the whole get in the first couple minutes in some DeFi coins, and it hasn't really worked out because either a tech issue comes up or whatever. But the fact that it was, you were able to take your time, you had over a week to kind of figure out your shit, and then from there you can just relax, because I know I got the same price, right? So
I get approached by like hundreds and hundreds of projects every single day, like on my Telegram, on my fucking email, and all of them are just offering like, 0.1% of all supply with no vesting. It's all the same shit. They're just offering tokens, like the max. I think one project offered me 1% of all of the tokens with no vest, and I'm just like, okay, well, like who else are you giving these fucking tokens to? So like most projects are just companies trying to get the most amount of influence as possible. Give them as many tokens as they can. Like, it says like, influencer marketing or advertising marketing or marketing spend, and it's like 10% of tokens. It's because they've given 20 influencers that 10%.
Yeah.
And then what happens is it comes out on the market and they can just dump whatever they want. And that's why everyone gets fucking murked. But with a Palm Swap, they were just really open and honest. They just said, look, this is not what we do. It's a fair launch. Everyone has the same opportunity, and that's great. Fair play. It's going to be better for everybody.
Absolutely. Yeah, no, I'm excited to see how this one goes over the next year or so here. Getting in right at the bottom of the bear market on a brand new thing at a fair launch price. Well, sorry, when I say bottom of the bear market, that's just me jumping to conclusions, because you guys know that's just my personal opinion. Sorry, Kieran, were you trying to say something?
Yeah, sorry. So this just reminds me of like 2020. So I always try to pretend like I'm a VC. So whenever there's a low cap project like this, what I tend to do is I take 5% of my portfolio and I split it across 10 bets. So for me, of that 5%, I put 0.5% in Matic, 0.5% in Sand, and 0.5% Harmony 1. So out of the 10, 7 failed, but 3 of them were 100Xs, and they made up for all of them. So it's just to highlight, like, a lot of them will be high risk, but sometimes, especially Matic, when I got Matic at 2 cents, it was 20 million market cap. And everyone was like saying, "Oh, this is a scam and stuff," and it was just about to be launched into the big exchanges. But I didn't go all in on it. I just took a small portion. It was 100x. So it's just kind of like sometimes people always say, "Oh, you should not buy this coin because it's not in a big exchange." But sometimes if you're a bit contrarian, I find if you get it into a small exchange, and if you get in before it goes into the big exchange, you can get those home runs. But I think there's a balance between doing the research, but at the same time,
get to the exchange, the more you're going to make, because the harder it is to buy. So if that's your edge. Technically, that's your edge. So like trading, you're edging. You're doing your strategy. But like if you're an investor, your edge is just knowing more than everybody else on something faster. Like what you want to do in investing is basically just you want everybody to agree with you later than you. So like what you're trying to do is you're just trying to get into shit on shit exchanges, and then like you said, diversifying into altcoins, 10 altcoins is a good strategy. The ultimate win would to put all your money into one altcoin, which 100x's. That's the ultimate win. So diversification is a strategy of not knowing, and if you don't know, diversify, and then obviously you get 3 wins out of 7, and if those 300x, you're hey presto, here we literally go. You're making absolute bank, and that's the same for me. I fucking invested in loads of shit which didn't make it. Wii U was one of them. I thought Wii U was gonna be really big. I did like 100k into that, lost it basically everything. So it's like you win, you lose, but when the ones you do win, you just want them to run.
Isn't that how Carl Roomfeld?
Which one, Carl Roomfeld? No, the Wii U is No, Carl did.
He made all his money. He just he just basically threw shit at a wall and just whatever stuck.
Exactly. No, he was in a slightly, so he is like, because he's an influencer, he just basically took all of the deals, which I was telling you about before. Yeah. That's what he did. So he's not a fucking, like, all he's done is he's taken all the free coins and the stuff and paid or whatever, and then just basically dumped all of those coins or whatever at a later point. But yeah, he might have had 100, which he went in on, 6 made it, and they all did like 1,000x. Like Elron was one of them. I know personally he did well on Elron. and then he just dumped it all. I think 5k in Elrond made 600k. So what? Put 50k in. Do the math. It's insane. 6 mil.
Yeah. No brainer.
So yeah, he also does like a lot of other stuff, but like main thing he does is just like shill altcoins basically, yeah. And that's what does as well.
Yeah, they've done very well.
It's Elrond's one of my favorite coins. I bought it at $10, but I love it. I'm quite bullish on it. I'm looking to accumulate more actually.
Yeah.
Yeah, I don't hold a whole bunch of altcoins. I really should start buying more now that I think I'm kind of waiting. The whole money flow cycle is that, money goes from fiat into Bitcoin, which is, the first risk on asset they're going to get into. And from there, they're going to make money and start going into higher risk and getting greedy, hopping over to Ethereum and then smaller altcoins. So I'm kind of waiting for Bitcoin to make a big move and then kind of calm its titties a little bit. And from there is when I want to start diversifying into more altcoins.
Yeah, like it trickles down basically. And the great thing about crypto is that once it comes in, it's more difficult to get out. So it's kind of like a one-way in system. Not all of it, but, it used to, to go back to bank, a lot of the time you come in, you're like, fuck that, I'll just leave it in USDT. And then at least you're in. And then there's only one click away from Bitcoin. So, the long-term macro, the whole thing is just amazing for Bitcoin. Like the whole thing is just amazing. I even I'm like leaning towards CBDCs being okay. Because they're not going to be tyrannical at the beginning. The governments aren't going to use it against people in the beginning. And if they do, it's so easy to verify it's the government. And then guess what? They've just made the whole world really, really, really validates crypto and also makes the whole world think in a digital way. And then there's the off-ramp is crypto to go into real cryptocurrency, not ledger-based databases. So I think it's like almost like they are. They think it's going to be great for them, but it's almost like the kiss of death, Trojan horse kind of analogy. They are painting their own end.
Yeah, I heard you talking about that in one of your videos, and yeah, I couldn't agree more that I think, technically, yes, we all kind of hate to look at those, but I mean, I agree with you that I think it's just going to get people more okay with digital money, because right now the thing is the whole, well, you can't hold a Bitcoin in your hand like the way I can hold a 20, even though you can hold a ledger.
Exactly, you're forced into be accustomed to it.
Yes, I agree. Yeah, couldn't agree more on that. I do think it'll be a little scary. I think the idea of programmable money from corrupt governments is terrifying, but like you said, I think if it's on blockchain, if it's verifiable, I mean, it's going to be hard to screw around too much at that point.
Well, it's more like it's more transparent. So like they might be more tyrannical and force more rules, and China is a good example right now. All the shit they're doing, like the people know it's the government so clearly now. It's just like, we know you're fucking us. So I don't know why Chinese people aren't getting up a bit more of a huff and fuff about it, but like I don't know. I can see China, I don't know. I'm going on a bit of a tangent here, but China, the whole thing that we're seeing there with like massive, like almost like, obviously communist, fascist like views, and they're kind of cutting off crypto completely. They could end up being the North Korea of tomorrow, because North Korea cut off the internet. Essentially, that's what they did. So no one could get access to like the broader world. If China cut off crypto, if crypto really grows and becomes more and more open and permissionless, it could end up being the same situation. So I don't know. It's fuck government. Stop trying to fuck us. And I feel like they're going to end up. I think like the internet and technology as a whole is just going to shrink the role of government in general. And we don't need it anymore as much because we have so much more access to information and coordinate with other human beings without a central party. So yeah, it's interesting.
Yeah, I agree. I've been too into this, and I totally been ignoring the chat here. It looks like we have one question. Lord Drake here. Sorry, new to the indicators. Please, can you briefly run through the colors on Algo 3 and their meaning? Do you mean the colors I have specifically there, or do you mean like the colors we can change it to? Because we can. This is just the color pattern that I really like. Basically, If things are starting to get bought very strongly, you'll see the color turning green here. You'll see some candles flipping green as it cools off. It basically just as pressure builds and cools off.
It's momentum. It's momentum. Yeah. It's actually correlated to the MDX Oscillator 5. So it's the same colors. That's actually how it works. So the MDX Oscillator 5 is the same colors on the price. So it's not telling you whether the candle is an up candle or a down candle. It's telling you if momentum is increasing or decreasing. So blue would mean flat.
I think I recall you saying in the updates, are you going to be able to reverse them as well? Because I know some people like to, they like to see green candles when it's selling off, for example, because, you want to buy low and sell high. So I think I heard you talking about that.
Exactly. So what it will be is instead of it saying, as it goes up, it's green. As it goes up, it goes red. Yeah. So that would be more for someone who's doing a reversal type of strategy, which is quite powerful. In China, it's flipped as well. Red is up and green is down, so it's hilarious. How they look at shit. But there's going to be lots of stuff in there. We're going to have tables as well. We're going to have probabilities of candle color for the next one. There's going to be lots of interesting stuff in there.
Nice.
We're going to have different types of buy and sell signals. The main thing we want to really work out is trying to make the buy and sell signal more precise, because a lot of the other stuff as well, like stochastic RSI and divergences, is a really good strategy in itself, but we want to try and get the most pure signal as possible.
Because different time frames can obviously give you mixed reviews, right? But that's
there's a blind spot to everything, because obviously you can't have an indicator which is 100% right the whole time. It's impossible, because otherwise everybody will use that indicator, and everybody use that indicator, then it wouldn't be successful. Because if everyone's buying same time, so say they have an indicator which is 100% always going to be right, and then everyone's like, oh shit, I've caught onto that, and then everyone starts buying when the indicator says buy, that's going to stop working, because obviously the more buyers on a specific price moves the price. Buying and selling moves the fucking price. So it means that nothing can work at 100% ratio. But what it's all about doing is just trying to limit the blind spots and just make it so it has the highest risk to reward, or you say probability of a winning trade for those beginner to intermediate traders. And then you use it in confluence with your own trading strategy, and then it can just enhance your probability of being profitable. That's the whole game, isn't it? You just want to enhance that. You want to get to 51, 52, 53. And if you're thinking about it in a different way, just whatever strategy fits your own, what you want to do, then you can make it work better for you.
Absolutely. And that's where I always say it's important to have your own technical analysis and use them as confluence, right? You don't want to just blindly take every single signal or anything that.
We're going to make it, it's going to be more, it's going to be more that's going to be more prominent. So multi-trend as well. We're going to have multi-trend on it. If you're on the 1 minute, it'll also show the hourly,
nice.
In terms of what the trend is.
That's
it's going to be lots of different stuff like that.
Cool. Yeah, I'm excited for that.
Yeah, and then we'll have a chart as well, which will show you on all time frames what the signal is, whether it's buy or sell. So, if everything's green, you're like, okay, the 1 minute's green, the 2 minutes green, the 3 minutes green, the 4 minutes green, the 10 minutes green.
Yeah.
And then you can kind of get yourself a flow. So lots of different stuff like that.
Very cool. Very cool.
Yeah, it's definitely going to be if you're someone who's just come into crypto trading and come into this market, these kind of things are just so fucking hell. If I had this kind of stuff when I was starting out, I would have cut out a year of losing, probably, if I had this kind
absolutely
of stuff. Maybe longer. So it really will help you at the beginning, and then even intermediate. And then what you see a lot of people do is with the indicators, because they're literally market makers using this stuff, but they just whittle it down to what specifically they like. So they might just say, okay, I only want to see this thing, and then they'll just use divergences for an example.
Yeah,
makes it easier.
Interesting right now how the moving average on the Algo 3 is lining up perfectly with that 20K, hey?
Yeah, sure.
Just absolutely perfect.
Yeah, that's the flip. That is kind of when it will flip. So that's kind of what you say would be support. On the MDX Algo 1, the very, very simple indicator, which was the first indicator I built, and it was just using a very simple EMA strategy built in with some super trend stuff, and then had relative strength built into the trend. That indicator is still really, really useful. It's the MDX1. You can use that on loads of shit, and it's almost so simple. It's almost beautiful. because it is just very, very like, and it's definitely a swing trading tool, by the way. But you can see that right now, you see where it says that price, where the support is bang on 20K.
Yeah.
And that is another thing you can look at and say, okay, well, look, if the price comes down and breaks that, where that trend line is, it's literally lining up exactly where logical support is. So, and you find that a lot with MDX Algo, that where the, it says there's support beneath it. When it breaks that, it will flip short. You find a lot of the time that's where support will lie. And that literally right there on the chart, just literally articulates that perfectly. It's bang on 20.
Yeah,
the next level is to hold.
I've never actually used this indicator. I've always only used the oscillator 4 and 5 and the algo 3. But yeah, I like the look of this one. That's interesting. That's nice.
Super simple. It's honestly just using a trading strategy which has been used since the dawn of fucking looking at price charts. Obviously, trading's evolved a lot from like going to a market and be like, I'm going to buy a fruit for $7 and sell it for $8. Like that's trading. But like, essentially what it's doing is just like limiting a lot of stuff down. But I know people who so I've been building the indicators for like just making them better and better over a few, like maybe a couple of years. But I know people who still just use this one, just the very basic first one.
Oh,
and like
yeah.
it is because it works for them. Like if you go on the daily, you can see very clearly how it's shown. Are you on the daily now or the weekly? Let's have a look.
Yeah, this is
so go
the daily.
if you scroll out and show the whole entire chart. So you can see it said obviously the red diamond was just after 40K. So there's another one. There's a green and a red. So you can see just after $40,000 it came. It's only just gone green actually.
Yeah.
And this is a swing trading tool, so it's pretty interesting to see that.
Yeah, and again, that's right after closing above resistance, not while we're trading in it. It's nice to see that we got above this wick here, close and retest that level with that diamond. I mean, that's beautiful.
Did you say something, Mikey boy?
Yeah, I was just saying I've still got the old school. Do you remember the V3, the PA and the MA?
Oh yeah, I remember.
I've got those ones saved on an old chart. I'm literally just looking at them right now, actually.
It's funny to see where it's all come from.
Yeah.
Like there was also an indicator which I went a bit rogue on with a different developer called the MDX2. The MDX2 is a whole different kettle of fish. Like we were experimenting with load different shit. Do you want to show that one as well?
The
Like,
L2
has a much more aggressive.
Here, let me just.
Like it has basically bearish and bullish signals, but it's a much more aggressive signal. So it's good for pivots, but it's not very good for trend because sometimes it will get the off thing. But you can see how it says these green dots bullish. Like sometimes they are phenomenal hits, but then like what we found is that it's much better for shorting this one than buying because it's more aggressive. So and down. So if it's more aggressive, it's going to be better at getting in, before a dump. But then the other way is that it gets in too early on a pump and then it goes down. So like it's difficult to get it perfect. But this one's using a whole different load of stuff as well.
Okay. Sweet. Yeah, I've never looked at these older ones or the 1 and 2.
White means like potentially trend reversal. Obviously red means it's still bearish, and then green if you go back in history. So right now it's saying that we're like in the middle. If you go back to like where we were, green's like 100% looking at a run up trend. White is like making a decision.
Yeah, white's kind of neutral territory yet.
Yeah, and then you can use the if you like created a strategy which said like, hey, look, I'll only take a bullish call if it's above the EMA ribbon, which is the white line, and it's above the EMA ribbon, and also it's had a prior low, a higher high or higher low, then you can get like a pretty good win to loss ratio on that.
Yeah. Yeah, like here we got even just above this little bit of resistance back here, got above that EMA, got the bullish diamond, flipped green, and just a beautiful run there.
Yeah, but then you can see it. The actual call is a little bit too fast on the way up. But what you would say is like, eliminate. Okay, if it's not above the EMA ribbon and it says bearish, that would only be a reversal to trend, the EMA ribbon. So like you'd put more weight on a call which is bullish above the EMA ribbon, the EMA line. Okay.
Yeah.
So if it's bearish, if you get a bearish signal, which is but the EMA line is going up above it, then put less weight on that. But it could mean it's going to come back to retest, come back to the mean.
Yeah, maybe more of a take profit signal more than a enter a new position kind of a signal.
Exactly.
Cool.
The indicators is more about us trying to make it so it's very, very like easy for people to like understand what it's trying to do. But like there's always blind spots, but it's just about trying to whittle out the perfect kind of, iterations on it.
Well, and everyone looks at charts a little bit different, so that's where it's important to do some back testing too, right? Go back and use the chart replay and find things that your eye is good at catching, because something that you catch as a very obvious play, I might not have the eye for that, whereas I play a different strategy that works well for me. I think it's always important to do your own back testing, and as much as it sucks doing a little bit of homework, I mean, it's very important in this game, right? So
TradingView can help you with that as well, because you can put in any strategy into TradingView and backtest it, but then you have to take into account slippage and then the fees. But yeah, man, it's pretty interesting. We've got some big updates coming anyway.
Excellent.
I was just wondering, the white line, does it seem to closely follow EMA 34 or EMA 55? One of those two, is that right?
Yeah, literally. It's a combination of 21, 34, and 55.
Okay.
Very simply. But like it's the what I found like over the years is that EMA ribbons with Fibonacci numbers are the best because they're not used as much, and Fibonacci's work beautifully on retracements and extensions. So for me, that's kind of like a better way to look at it, because a lot of people will just go the flat numbers, like they'll do like the 21, or they'll do it's the 21, 34, and 55. Sorry, but they'll do the 25, the 50, and the 100. And yes, all the 200. And the 200 is good, but if you're going to really like whittle down your EMAs, it's probably better to do fib EMAs. But then the other thing about EMAs and SMAs. So the 200-day SMA is much better than the 200-day EMA because that's going to be a different calculation. But I would say that EMAs are good because any time frame, it will dynamically change to whatever time frame you're looking at.
I've actually found the white lines quite useful for shorting, actually, because I like it when the price goes below the white line, then kisses it, and then buggers off further down. So like sometimes it can be effective.
Exactly. Well, it's good because we're in a bear market, because at the end of the day, the long-term narrative is down. So if you're selling into an EMA, it's resistance, so it's more likely to pay off. But you'll probably find that in the bull market, then you'll be looking to buy the EMA. Because right now we are actually above the EMA now, so it's pretty good. But you can see how it's a white. This indicator is slightly different, but you see it's white, so it's not 100% decided calculation. But if we get above the prior high, the micro high will go green. So that's basically how it calculates it.
Yeah, when we get above there.
Above there, it'll go green.
Yeah. But yeah, right now I love that we're above this, and we got very close to kissing that line there. And just going, again, just the fact that lined up so close to that 20K mark, I mean, yeah, that looks beautiful.
If you go back as well, you can see on the prior, when we're at 30K, it came and retested the EMA ribbon, bang, got rejected off of it. The prior one from that as well is the same story. Keep going up. You can see there, bang, got rejected. We actually broke out of it, deviated across over it, and then you can see if the market can't get above the average price on a 21, 34, or 55 day moving average, right, exponential moving average, then you just have it's just basically telling you that, okay, the average price is still going down, so the probability is to go lower. That's all it's showing you. It's not anything special, it's just the average price. But if you can't get above the average price, it gets rejected and it keeps going lower, then you get an idea of what's going on.
Absolutely.
Does anybody use Bollinger Bands interests? Because I've been testing them the last couple of weeks. I've never really used them before.
Sorry, testing.
Yeah,
what?
So we have some updates. The Oscillator 4 is interesting because we have some big updates coming to this. But the Oscillator 4 uses band analysis on top of relative strength, basically. Okay, so what you're seeing is we might bring band analysis down into the PA, but if you go to Oscillator 4, what you're basically seeing is you're seeing a momentum indicator, but with band analysis on top of it. Yeah. So it's almost showing you what the momentum is on the price, linear to band analysis. So it's very similar to that. And we've got some stuff coming to that to make it.
I find they're quite useful for helping you with, stop losses.
Yeah, I would say that's a good way to do it. Yeah, if you put the stop, like say above the actual band, you're probably going to be less stopped more because it's unlikely if you back test it that you're going to go. If you shoot through it and go right above the band, you're overbought. It's the same. You know, all these things are basically articulating the same data but in a different way. So RSI will be the same. RSI will be way over, but the Bollinger Band will be way over, and then RSI will be like 95. You know, Bollinger Band will be over. So you're like, okay, well, this is an interesting point. Potentially get a reversal. But I don't play reversal. I don't play reversals that much. There are occasions, but I'd much rather let something happen and then play the swing and then buy the support all the way up. So like, you know, if it's uptrending, for instance, you know, it rallies, finds resistance. Say you're in a blue sky breakout. This is where I'm like, we'll absolutely nail it. Is it in a bull market, uptrending market, blue sky breakout, so no resistance above. When it rallies, it stops, finds resistance, it crashes back down. I always buy the prior high on like literally regimented buy orders, like 4 different buy orders in the box. And then it's so likely you get a bounce because the momentum is to the upside. And then it's so easy just to put the stop loss, break even. Guess what? Deviation of the high, next leg. And then that's where, you know, I'll sit on my hands for 6 months. But as soon as you get into an uptrending market, I'm going to be just sitting there all the way up. And that's where you get these huge percent wins in dollar terms. But, you know, as it goes up, you make less Bitcoin. But at the end of the day, if one Bitcoin's going to be 100K, who gives a fuck? It's all good. Living the dream.
Life is good.
Yeah, no, that's a good shout.
Right,
it's just easier to be a long guy. You know, it's hard to be a short seller.
Well, logically shorting, you can only go to 0, where long is potentially infinite.
Yeah.
Well, if you study calculus, like the calculus states that, you know, so it's the same at the end of the day, but, you know, if something goes down, it can only go down 90% down, right?
Yeah.
But the thing is, if you get into a trade which takes you 90% down, it's say in Bitcoin, in a scenario of Bitcoin, so you short from 70,000 and it goes 90% down, it just means that you're not going to make a massive percent gain in dollars, but you're just going to make a lot of Bitcoin. But Bitcoin's priced at a lower price now. So almost like you're making less on the way down in dollars, but you're making a lot of Bitcoin. Because obviously it is exponentially correlated to calculus. If the amount of dollars you're making is going down, the amount of Bitcoin you're making is going up. So
you have to be almost certain that it's going to go back up. You wouldn't do it with stock, so to speak.
Yeah. Well, stock's kind of similar as well. If you're shorting stock, you're just going to get more shares. You're going to get way more shares than you are going to get the dollar terms. When it goes up, what you're doing is you're making, as it goes higher in price, the percent's going to be much bigger in the percent game you make in dollars, but it's exponentially less and less Bitcoin. But I like it when my Bitcoin buys me more shit because, you know, you can have $1 million Bitcoin, but if it's priced at $1, you can only buy $1 million worth of shit. So like the long buying card is nicer, but you make percent gain, but not as much Bitcoin. That's why getting into trades from the very, very beginning is crazy asymmetric upside. But you can only, like you said, you can only go to 0 if you're going the other way on the downside. Yeah. But you will make a lot more of those coins if you're in inverse perpetuals.
Yeah, I love the inverse where you get into a nice long and your Bitcoin and the amount of your Bitcoin is going up. That's a good
Again, it's a double long, yeah.
Compounding.
It's like the same as if you do USDT perpetuals to the downside, it's a double short.
Yeah.
But if you just like look at calculus and how it looks at it, you know, the thing is about losing a trade as well. A lot of people think if I lost 50%, I need to make 50% back. That's actually not the case. It's just to make that about 3 times more upside. So if you lose 50, you need to make 150 back. If you're going to try and make your money on the way back up. So a lot of people will say, oh, I lost 70%, but you know what? I'll make 70% my next trade. But actually, you won't be back at square one in the amount of crypto you have or stocks or shares. So people don't think about that as much, but yeah.
I don't know. Guys, I was thinking about taking a little breather here and stepping outside. So, I mean, we've been at this for almost 2 hours here. I was kind of thinking about wrapping up, but does anyone else want to...
I might go and stream. I'm having a glass of red wine. I'm up for it. I'm going to go stream on my channel, Legends. I'll see you over there.
Yeah, I'll crack a couple beer and head over there.
I'm going to go and get my bottle of wine. Here we go.
Cool.
Let's get the bottle of vinos out, boys. Let's fucking do this.
Okay, let's get after it, fellas. All right. Well, thanks everyone for tuning in. This was awesome. This was a super interactive one. I'm glad you were all able to make it. MDX, thanks so much for tuning in and being such a big part of it. This was awesome. So yeah,
it's fun one. I'll see you guys in a minute. Cheers
you
up.
betcha.
Bye-bye.
See you there.
Thank you, guys. Yeah. Bye bye.
All right, Leggies, like I said, I will upload this and it will be posted in the channel there. It'll be on my YouTube. If you do like my analysis and whatnot, guys, be sure to check out my YouTube channel if you haven't. StuTube Trading, all one word. Also follow me on Twitter if you're over there. I do post some of my analysis, sometimes updates on my trades and stuff like that when I don't necessarily have time to make a video, or if I'm out of the house, whatever. So do yourself a favor and follow me there, I guess, if you appreciate what I'm spitting here. So other than that, guys, thanks so much for tuning in. And if you aren't live here and you're just watching the video on my channel, please do me a favor, smash that thumbs up and subscribe if you appreciated being a part of this. And with that, I'm out. Stay safe, my friends. Peace.
Peace.